right, welcome back to this week's edition of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's Tech Corner, we're going to be covering Uber Technologies. Now, Uber Technologies is a global technology firm that develops and operates proprietary applications to facilitate transportation and delivery services. The company operates through three main segments. First off, its larger segment with 55% of revenues is mobility. Delivery represents about 32%, and freight, which represents around 13% of total sales. Now, the mobility segment connects consumers with transportation services, including ride-sharing, car-sharing, and micro-mobility options across 70 countries, offering diverse vehicle types and financial partnerships. The delivery segment, also known as Uber Eats, allows users to order meals and other items from a range of retailers, contributing significantly to Uber's growth by expanding its user base and engagement. Now, lastly, the freight segment provides a digital marketplace connecting shippers and carriers, enhancing logistics and transportation management. Overall, the company is well known for its scalable platform that leverages a massive network, leading technology, and operational expertise to power its services globally. Now, Uber faces competition from major companies across multiple segments. First off, in the mobility segment, it competes with Lyft, which offers ride-sharing services primarily in North America. In the delivery sector, Uber competes with DoorDash, a prominent player in the food delivery market. Additionally, Uber Freight segment competes with C.H. Robinson, a leader in logistics and transportation services. Now, the other thing to keep in mind is autonomous vehicle technology, which is an up-and-coming revenue stream, potentially for Uber and other companies, but major competitors in the space may include companies like Google's Waymo division as well as Tesla. Now, Uber's unique value proposition lies in its extensive global reach, its ability to operate as a super app, integrating multiple services into a single platform. This integration enhances user engagement and retention, as evidenced by the higher spend and retention rates among users who engage in both Uber's mobility as well as its delivery services. Furthermore, Uber's strategic partnerships in the autonomous vehicle sector positions it as a key player in the future mobility solutions, leveraging its platform to support autonomous vehicle operations without actually owning expensive fleets. Now, in recent news, going back to August 6th of this year, Uber reported adjusted second quarter profit of $1.35 billion, or 63 cents a share, up 34% year over year from an adjusted profit of 47 cents per diluted share last year. Revenue for the second quarter totaled $12.65 billion, an increase of 18% from $10.70 billion for the same quarter last year. Now, some of the metrics that are important include gross bookings. If you look at Uber's total gross bookings for the second quarter, those increased to 17% year over year. Importantly, the mobility segment, which is the larger component, net revenue increased 19%, largely driven by higher trip volumes. But the fastest growing segment includes its delivery business. Now, in the delivery business, net revenue grew 25%. The increase was the result of improved cost leverage and higher volumes. Uber also initiated a new share repurchase program of up to $20 billion worth, representing about 12% of its market capitalization. Now, there are many positives to consider with Uber. Uber's strategic partnerships in the autonomous vehicle space, including collaborations with Waymo and Baidu, position it to capitalize on mobility trends while maintaining a capital-light, cash-rich model. The company's robust financial performance is driven by strong growth in its delivery segment, with 25% year-over-year revenue growth, but also 48% profit growth, which highlights its scalability and market potential. Over the years, profitability has been improving along with the stock price performance. For example, if you look at the net income margin over the last 12 months, it increased to 26.68% of sales. This is largely higher than the sector median of around 6%, but also a significant improvement from its 5-year average of negative 13.5%. This suggests improving scalability and efficiency in translating sales into profits. Now, lastly, as I mentioned, Uber's $20 billion share repurchase program also reflects its commitment to shareholder value, supported by significant free cash flow generation and operational efficiencies. Now, despite many positives for Uber, we have to also address some concerns. First off, Uber's ambitious autonomous vehicle plans face significant competition from well-funded players like Tesla and Waymo, potentially impacting its market position and growth prospects. Geopolitical risks and protectionism could affect Uber's international expansion plans and revenue growth, particularly in key markets like Brazil, India, and China. The company also faces risks related to employees' ability to classify as independent contractors. Requirements to compensate independent contractors as full-time employees could raise costs and weigh on profitability in the future. Additional risks facing Uber include participation in highly competitive, low barrier to entry markets, including ride-sharing, meal delivery, and freight transportation. This suggests a possible need in the future to reduce fares in order to remain competitive. Now, from a technical analysis standpoint, Uber has significantly outperformed the S&P 500 with year-to-date returns of approximately 56% and a 52-week return of over 31%. The technical condition for Uber is improving as several pertinent indicators have turned positive. Momentum as measured by the RSI is gaining strength above 50, and near-term positive indicators such as the 10 and 20-day moving averages are positive and rising below the stock price. The stock is trading above its 50-day moving average, which is rising, confirming an improved technical condition, while it's also trading above its 200-day moving average, which is pointed up, adding to the stock's improving intermediate technical condition. Now, from a price pattern standpoint, a close above $98 is a level to watch to potentially confirm a trend continuation breakout of a double top formation, which began to form in early July. Now, in summary, Uber remains the dominant global mobility and delivery platform in the world today, and may be well positioned for sustainable top and bottom line growth going forward. The partnership-first approach to autonomous vehicles may also allow the company to benefit from autonomous vehicle adoption while avoiding substantial R&D investments. Uber's compelling value proposition lies in converting single-service users into multi-platform customers, with fewer than 1 in 5 eligible consumers currently active in both segments. Deep network effects and cross-platform monetization may help drive sustainable competitive advantage for years to come. Now that's it for this week's edition of the Tech Corner. Please join us next week ahead of the NFL season kickoff. We will be talking DraftKings Incorporated, which has revolutionized the way fans engage with sports with real-time analytics and odds making as more and more states legalize sports betting. Thanks again for joining us on the Tech Corner. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.